Principal Financial Group Q1 2026 results reported net income surged on fair value swings tied to long-exited business lines. Core operating earnings grew more modestly. Net income attributable to Principal Financial Group rose to $424.6 million in the first quarter of 26 compared to $448.1 million the same period last year. The company reported a significant swing in its exited businesses in non-GAAP reconciling category, moving from a $314.3 million pre-tax loss in Q1 2025 to $31.7 million pre-tax gain in Q1 2026. This turnaround was primarily driven by a $77.4 million gain in the fair value of funds withheld embedded derivatives, a sharp reversal from a $209.7 million loss in the prior year, while the 2025 base was further depressed by an asset impairment associated with an exited business. Core segment performance remained stable with total pre-tax operating earnings of $558.5 million, a modest increase from $485.1 million in the prior year. The company returned $494 million to shareholders through $73.5 million dividends and $235.9 million in share repurchases during the quarter. The massive jump in net income is largely an accounting artifact of the funds withheld method, which exposes the company to significant volatility from non-cash fair value adjustments on legacy business lines. While headline earnings surged, the modest growth in segment operating earnings suggests that the core business is growing at a much slower pace than the bottom line implies. Capital returns continued at a steady pace. Share repurchases were slightly below the year-ago quarter. Alongside a 7% higher per share dividend and an essentially unchanged debt load, the company faces significant volatility in its exited business segment, where a shift in market assumptions can lead to multi-$100 million swings in reported income. The reinsurance of exited businesses leaves at an $45 billion funds withheld payable on the balance sheet, a liability under the deposit method of accounting, and fair value movements on the associated funds withheld assets flow directly through reported income. Equity market declines during the quarter had an unfavorable effect on the net market risk-benefit position, a reversal from full year 2025, and the net amount at risk for market risk benefits rose to $82.2 million from $20.3 million. Changes in the fair value of the funds withheld embedded derivative, as these drive the majority of the company's non-operating volatility. The pace of AUM growth in principal asset management, up 7% year-over-year, there's $737.6 billion, though assets dipped slightly during the quarter itself. The impact of equity and interest rate movements on the net amount at risk for market risk benefits in retirement and income solutions.